Hello, everybody. Welcome to our limited company buy-to-let webinar hosted by R3 Mortgages. See, we've got some people on here, which is good. It's not just me talking to myself. This is a new piece of software that we were using, so please bear with me in case you've got any questions or queries. I believe there's a chat functionality and function here, and by all means, as we're going through, if you want to ask any questions, please do so. I think there's something to raise your hand or to type into the chat pod. So hopefully we shall be able to get going from there onwards. We're all on listen only mode at the moment. So if anyone has got any questions, then please do let us know. So today what we're going to do is we're going to have a whistle-stop tour around limited company buy-to-lets. I'm not going to revolutionize the world for you or give you some massive revelations that some of you who already experience using limited companies as structures for buy-to-lets aren't going to already know, but hopefully I will give you some useful information and food for thought for later on. So the webinar is going to last about 15 minutes. Keep it short, keep it sweet, and then later on I'll take some questions, and if you've got any questions thereafter, then you can get in touch. My details will be there afterwards. So let's get cracking. So before we start, just a massive disclaimer from me. This webinar is for general information only, doesn't constitute advice. And also I fully suggest that when you're doing anything in this realm, you take advice from an appropriately qualified professional. Now, I am not a qualified accountant, nor do I claim to be. My life has not taken me in that direction. But if you take one thing from these webinars, please take this. Your accountant or your tax professional should be your best friend. Before you do any deals or anything like that, they should be the person that you're speaking to and running past it. And I've seen so many clients not do that and then regret it later on. So as an overview in terms of what we're going to be covering, we're going to take it and strip it right back to the bare bones. What is a limited company buy-to-let? The advantages, why are so many people doing it now? And if you've just paid your tax bill and you're crying, or you're going to pay your tax bill by the 31st and you're going to be crying then, you'll probably have an idea of why people are doing it. Some of the pitfalls and some of the disadvantages of doing stuff through company structures. We're also going to then be talking about what types of properties you can actually buy using limited company buy-to-lets, and mainly what you can get financing and what the financing options are available on the market at the moment. Then also useful features. I'll talk you through a few case studies that we've got going on at the moment, and then after that we'll have any questions and answers from there onwards. We do quite a lot of limited company buy-to-let, I would say, as a proportion. We've been doing it for years. I've got a number of cases on my desk where we're refinancing buy-to-lets that we did originally when clients bought the properties a couple of years ago. So the market is maturing, it's going to get more matured, so let's crack on. Okay, so what is a limited company buy-to-let? So traditionally, if you wanted to buy a property, if you wanted to buy a buy-to-let, how would you do it? What you would do is you would go, and if there was the couple, partner A, partner B, you would buy it in your own personal names, either tenants in common or joint tenancy. Joint tenancy is probably the way that most people would have done it, and you would have owned the property. So you'd have it in your personal name, you'd declare all your rental income on your tax return, and then come the end of the year, you'd see what's come in, what the allowable deductions were, and what's gone out, and then you'd seen what profit you'd have made, and then put that on your tax return accordingly. And then over time you'd have the capital appreciation, and then long term you'd either sell it or pass it over to the children, depending upon what your structure is. All this is now for limited company buy-to-lets is buying a property, but rather than the owners being an individual, it is a said limited company. Okay. So with regards to the limited company, how would that work? Now, normally when you would set up the company, the lenders from a finance perspective would want it to be classed as a special purpose vehicle. That is a limited company who's only holding property. Okay, so let's say you don't have a company as of this moment. You speak to your accountant, or you want to do it yourself and register it with Companies House. You'd go on, you'd set up the limited company, and who are the directors and who are the shareholders. Now, it's also going to ask you what the classification code is for that particular company, and there's a range of classification codes that you can choose. On the system now, if you can see this, 68,100 buying and selling of real estate, 68,209, 68,320 and 68,201 are universally the ones that most lenders come to accept. So if you set the company up with that classification code and it's just using being set up to hold property, then when we're talking about special purpose vehicles, that's what we're talking about, and that's ultimately how it would tick the box with the lender. So ultimately, rather than you personally owning the property or the asset would be owned by the company. Now, I'll talk through the mechanics in a moment, but in most cases, the only other thing that you will do is, even though the company is owned by even though the property is owned by the company, when it comes to financing, most lenders are going to want to ask you to sign or accept personal guarantees. So God forbid, if the company is not able to meet its obligations with regards to any financing, then essentially they will come to you. So be prepared for personal guarantees to be requested if you're doing a limited company buy to let. Now, in terms of the process, before I go on to what the advantages and disadvantages are, in terms of the process of arranging a limited company buy to let, it's not a million miles away from doing a standard buy-to-let transaction, especially from our point of view and where we are. Now, there are some lenders who will want the company to be set up, or most lenders will want the company to be set up prior to getting a decision in principle. But you don't have to have set up the company and for it to have done anything for a substantial period of time before you go to a lender and apply for financing on it. There are many lenders who'll accept day one, company's been set up yesterday, day two, we're putting an application for a buy-to-let. The information that will be asked for in most cases is of the directors and the shareholders, dependent upon the shareholder value, and all lenders differ from there onwards. So in terms of getting your own personal information, it would be like you would do a normal mortgage application. I hope you're with me so far. The case would then be packaged all up. It would go to the lender. In most cases that they would ask for additional information. They may ask for business plans, cash flow forecasts. Remember, we're a company now. This is where it gets all exciting. And again, the requirements dependent on lender. And then probably the other stuff comes on the legal side. They ask for minutes for approval of buying the property, this, that, and the other. It just becomes a little bit more convoluted. So it's slightly more, I'd say, in depth than doing it through a personal basis, but it is not anything that can't easily be done by obviously using people who know what they're doing. Let's come on to the advantages. So why are people doing it? When you were registering on the event, there was the ability to download this fantastic booklet, which talks about buy-to-let properties and tax and the changes. And the main reason why people are looking at this now, especially high-rate taxpayers, which are most of our clients, because of the changes with the tax relief. We all love government and we all love paying taxes. I'm sure we are. I'm sure we do even. And that is the main reason. I'm not going to go into the tax changes. That's another conversation for another day, or a conversation for your accountant. But ultimately, the benefit of holding it through a limited company is that the amount of the cost of the interest can still be fully offset. Whereas there was tapering side with if you do it through personal names, and especially if you're a high rate taxpayer, as you'll notice probably from your tax return this year versus the previous years, you'll end up probably paying a lot more tax for your property. So that's one main reason why people are looking at that structure. But there are other benefits of holding property within a limited company. This isn't something that's happened all of a sudden. This is something that's been going on for some time in terms of owning property, but because of the changes, more people have actually seen the benefit of doing so. Now, Putting in the deposits on the property, a lot of people do that by injecting money into the company via a director's loan. And the advantage of director's loan is then obviously you put it in, it's a loan to the company, you can then take funds out from there onwards should you choose to. Now, also the other beautiful thing, and where other people are using this as part of their planning, is that limited companies essentially don't die. Okay. There is one moment in time that I shall be dearly departed from this earth. So if I own property and God forbid I passed away, and if it was in my own personal name, it would be dealt with accordance to my will, etc., etc. Limited companies don't die. So for generational planning can be actually quite a useful tool, because what you can do is directorships of limited companies can change, and shareholding of your limited company can change. If you had a limited company set up and it was holding property and it was holding assets, the nicer your children are to you, you may want to be giving them more shares of you. If they're not listening to you, like my daughter, you may want to decrease their shareholding, and vice versa. I say in jest, but ultimately things can change, and that's the reason why some people will prefer that benefit and that mechanism. Another advantage on it is also that with regards to ownership, in terms of the loan amounts that you can get, again, without going into too much detail, with the changes of how the lenders work out how much they will lend you, etc., etc., sometimes limited companies get more generous stress test calculations. And what that means is if a high rate taxpayer came to me, let's say, for example, we deal with a lot of doctors. If a doctor came to me and he was a high rate taxpayer and he wanted to borrow, lender in personal names, lender X might apply one calculation. If he's doing it through a limited company, it may give them the capacity to borrow more money because there's a more generous stress test for limited companies. Okay, moving swiftly on, time is against us. Disadvantages. There's no capital gains tax allowance for limited companies as such. If you had property in your own personal name and you ever sold it, if you've got annual CGT allowances, you can make the use of them. Essentially, that's one advantage. Also, if you have profits on company, there's going to be corporation tax. If you're going to withdraw it from there onwards, subject to the obviously normal allowances, there might be other costs as well and taxes for you to do so. Limited company buy-to-lets are going to cost you more than standard buy-to-lets, and that's just the way of the world. That's how things are. Now, 2 years ago, the pricing was a lot higher. What we've noticed in the last 2 years is as more lenders have come into the market and there's more competition, because the lenders seem to have got a comfort factor in terms of how things have worked, the pricing does seem to be going down. The specialist lenders have had really the major benefit from it there onwards, but some of your more traditional buy-to-let lenders are appreciating that ultimately it's just a facility and a tax efficient wrapper that people are using. From their point of view, there's still guarantees that people are giving, so the risk to them is limited. So also, the number of lenders in the limited company buy-to-let space is probably less than there are on the standard space. However, again, that is increasing as more and more people are doing it. If you're running a limited company, as much as your accountants are going to love you, you're going to have to pay them annually if you set up a limited company for a set of accounts to do your returns, etc., etc. So you need to factor those costs in. Also, the legals on limited companies do usually take a little bit longer to go through when you are buying the property. So the process might be slightly longer for purchases and remortgages. And also, as I said before, sometimes when we're doing limited company transactions, the lenders are asking for, and especially if it's a portfolio landlord, cash flow forecasts, business plans, this, that, and the other. So just expect a bit of work. But the main thing you need to do is speak to the accountant to see if the benefits of holding it through the company are going to give you major advantages. So what types of properties can be bought by the limited companies? We've got your standard stuff. You've got your flats, your houses, your HMOs, your short-term lets, multi-unit blocks. HMOs and multi-unit blocks seem to be becoming more prevalent at the moment as people are trying to maximize the return that they're getting for their investments, and the good old-fashioned commercial and semi-commercial property as well. And again, people are looking more at these in terms of chasing yield, and all of these can generally be done through limited companies. Useful features are that you can change the directors and the shareholdings. Selling residential properties to limited company, we've done this quite effectively in a few cases where we've sold property from personal ownership to a limited company. Now, that's sometimes coincided with people trying to move property, or they can't sell their own property, so they've decided to sell it to their own limited company. If you're buying a property that's a lot more in value, then it's an advantage to you to do that. So by all means, if that applies to you, then drop me a line and I can talk you through it in more detail. And again, if you are looking to incorporate in the future, that could be another advantage. And again, incorporation is something that you should be discussing with your accountant, especially if you've got a large portfolio and if that's a possibility to you. And again, you can get more generous rental calculations from the lender. Thank you very much for listening, ladies and gentlemen. If you've got any questions, then I believe there's some question mechanisms down there. Type them in or whatever. You've got my contact details here. This is the first of a series that we're doing. The next one's going to be on portfolio buy-to-let. The next one's going to be on buy-to-let refurb products, which can be a very effective, useful tool. You've got my email address there, so please drop me a line. And if you've got any questions, please let me know. Are there any questions? I'm going to open up the floor. Okay. No, that's not it. Okay. Questions. Here we go. Question mode has been enabled. Any questions? Okay, got a question from Anas. I hope I've said that. What would the tax implications be of selling a residential property to a limited company? I would probably take the fifth on that, and I would refer you to your accountant. I'm not an accountant. Essentially, if you were selling it to a limited company, if it's your own residential property, it may be different from if it's investment property, but that's where you should speak to an accountant. The one thing you have to take from this seminar, a webinar, even it's not a seminar, a webinar, is get a good accountant. If you don't think your accountant's good, get another one. Getting a good accountant is like going on dates. Speak to a lot of people and make sure that you get someone who you know knows up to date with everything that you can claim for all the rules and the regulations, especially if you're involved in property. There are handful of accountants that I've come across who, when I speak to them, I really think, whoa, this person is very hot in property. Your accountant that does your company stuff may not necessarily be the best thing. Okay, do you extract the director's loan from the company tax-free? Again, this is another one that I would, you're giving me all accountancy questions here. This is another one that I would direct directly to your accountant. Is it possible to change existing personal buy-to-lets to limited company buy-to-lets? Yes, essentially, there's two ways you can do it. You can do it as a sale and a purchase, which most lenders will accept. Well, it's not most lenders. Some lenders will accept. But if you do that, again, the purchase by the limited company, because it's a separate legal entity, will incur stamp duty. If you have a large enough portfolio and want to move the properties from the personal name to the limited company, that's where we're talking about incorporation. And there was a court case, Ramsey versus HMRC, which set, I won't say the precedent for that, but which a lot of people refer to. Now, before you could contact HMRC for advance clearance on these types of things, but from the accountants that we speak to, that's not the issue at the moment. So again, you're asking me for someone's accountant. Thanks for this. What is the impact on stamp duty if buying another property on personal name? Do you pay extra stamp duty even if you have the property in a limited company? From my understanding, the limited company is a separate entity, so that would be according to whether you had another investment property in yourself. Please, can you clarify, when registering with Companies House, which purpose to pick? The SIC codes, which I put on there, which if they've gone, I'm happy to share with you later. Just drop me a line. 68100 seems to be the most prevalent one. There are 68100, 68209, 68320, 68201. So that is a possibility. Now, you can also, I didn't mention this before, but it is possible to do buy-to-lets if you have got a trading business. Now, we deal with a lot of doctors, doctors. I don't know how that's happened, but for some reason we deal with a lot of doctors, and they do consultancy income in a separate limited company. I've been asked a number of times, is it possible? You can do it as well in a trading business, but again, I keep on saying this, and I'm going to say this again, speak to your accountant, because if the property is owned by the trading business, and God forbid if anything happens to the trading business, that may fall part of the asset. By doing it as a separate special purpose vehicle, then that could be keeping the asset separately from the trading business. And there are some lenders that will allow intercompany loans from one company to the other. So if you're going to be setting up a structure, also ask the accountant how to do it. Then go to your broker and say, I'm thinking of setting this company up with this structure, because I've had weird and wonderful accountants come back to me and we've done group structures and this, that, and palaver. And I'm like, that's very nice, but you've now limited the number of lenders who'll look at it to that. So they've had to go and unwind it. So speak to the accountant, discuss the structure, and then go back to your broker or whoever you're arranging your finance with, and then ask them, is this acceptable? How's it going to limit? The accountant, your broker, your lawyer should all be like that. Your financial advisor as well. The most successful clients that I have, and I've got some clients with massive portfolios, we all speak to each other as part of their professional team. So that's also something I'd like to say. Thank you for your useful talk. What do the various SIC codes numbers mean? What is the difference between them? The main difference between them, and we're going slightly over, so I apologize if anyone has to drop off. The main difference between them, from my understanding, is what the purpose of the business is. Ultimately, all the ones that I gave you all relate to the buying and selling of real estate or holding property for rental purposes. Again, on Companies House, if you just put in what is SIC code 68100, etc., etc., it will tell you. Can I put through some private medical work through the same company? Again, a special purpose vehicle, which is going to probably get you the greatest number of lenders and the most competitive financing, will only want that property and the details of that property in there. If you start putting the work through there, then it ceases to become, from my understanding, and again, accountant can clarify this, a special purpose vehicle, so to speak. So again, that's where you may want to keep the two separate entity. What kind of rates, lending ratios can we currently expect to get via limited company routes? I'm not going to get too much up into rates because rates change on a daily basis. I'm doing some limited company structures on a 2-year basis at 75% loan to value, and the rates are starting with 2s. 5-year monies, the rates are usually starting with 3s. If it's a HMO or it's an MUB, multi-unit block, again, those are probably going to be higher, but essentially that is the remit. But these lenders are competing for your business. Every day the sourcing systems change, so dependent upon your circumstances at the time, depends on what's going to be the situation. How much loan to value can you borrow? Now, it all depends. A lot of it's driven by the rental income of the property. So where I'm in at the moment, we're in London, central London. For London and the south, we don't seem to get fantastic yields. Up north, it's a lot higher. There are lenders that will potentially go to 80, 85% loan to value, but generally above 75, the rate starts to jump up. So I would really question whether you need to go that high in terms of loan to value from there onwards, or really if that is best for you, because then you're paying the whole money at the higher rate rather than just the difference above 75% loan to value. And I think I just answered how much loan to value can I borrow. Okay, I'm going to take one more question before I've got to go home. Otherwise, my wife's going to change the locks and divorce me. One more question. I think someone's typing something now. Sorry, another accountancy question. Okay, I'm not an accountant. If I own 2 companies, can I get the 2K dividends allowance from both companies? Well, you've answered your own question there. That's an accountancy question. It would actually been useful to have an accountant on here, I suppose, but we'll know that for the next time. Setup fees are roughly what for these mortgages? Most lenders are going to charge an arrangement fee. Now, initially, they used to do it as a percentage, circa, I'd say 1.5% to 2%. A lot of them for the limited, not a lot of them, some lenders now are coming in at flat fees, circa 1,995 for that, rather than doing it as a proportion of the loan amount, whereas for the higher loans, it would make a difference. But again, don't get too het up with the actual arrangement fees, because when you're sourcing the deals, you need to balance those off with the actual cost of borrowing, and then also the criteria and stuff like that. There's some really weird and wonderful stuff that can be done through limited company stuff. So one thing I would say is don't get too het up on rate. Okay, that's the final question. Now, if anybody wants to get in touch, you've got my contact details. There's supposed to be something here with me onto LinkedIn, but I don't know how to do it because I'm just doing this. So LinkedIn, Riz Malik, you can't miss me and my face on there. Drop me a line, or riz@r3mortgages.com if you want to get in touch thereafter. We are doing another event, and we will be doing more of these. I hope you found them useful. If you want to drop me any feedback or anything like that, or any topics that you'd like to know more about in the future, then please do get in touch and we will take it there onwards. Everybody have a good evening, and I hope to see you or speak to you soon. Take care. Bye-bye.